All right, good morning, everyone. Let's get started. Okay, last night we had a drift up pretty much on all U.S. markets, more or less the entire session. The bottom line is here, the most important thing that we keep talking about in markets turned around and moved the other way, and that's what created the balance in the S&P. That's the yields on the 10-year Treasury. So we traded up to as high as about 235 or 236 on 10-year Treasury yields yesterday. Toward the end of our session, we backed off to about 229 and maybe even 228. And, as we went on into the U.S. session, we traded all the way down to 225, and now we're sitting at 224 this morning. If you look at literally the last week, you can overlay the bond market against the S&P 500 future. It's almost a one-for-one tick. It's unbelievable. How long that's going to last, I don't know. So we've got a total inverse correlation to Treasury yields and the S&P, and we've got to, like I said, this is going to be the most important thing that we're going to watch for the foreseeable future. Obviously, markets are petrified of higher rates. At some point, the markets are going to either one realize that higher rates are coming, or two, they're just going to kind of get used to it. So we'll have to see which one of those ends up panning out first. So we also saw the German 10-year yesterday, which got up to 70 basis points again on the yield, which is the high from, I think, Thursday. And that's going to be the line in the sand for the time being. We had some more corporate action yesterday. The one thing that we can't say is that 2015 has been, we are on an all-time record pace right now for M&A. And that's also kind of, keeping a bid in the market. You can see AOL yesterday was up 18%. Verizon coming out with a bid at $4.4 billion, trading nicely above the offer price. So obviously the market thinks that someone else is going to rather come for them. And so we just continue to see so much M&A. It's really hard to get markets selling off with this much M&A going on. All right, if you look in the Asian markets, we're up across the board except for in Shanghai, which tends to kind of do the opposite every day. You can see that there's no real leadership again. We haven't seen leadership out of Asia since I can remember. Even when the Chinese interest rate cuts happen, everybody right now is watching the U.S. and watching Europe, and that's kind of where that's what's driving markets for the time being and probably for the foreseeable future. All right. Chart of interest today out of from Business Insider. You can see here this is showing the debt to equity or leverage, debt to equity ratio out of the S&P 500 going back all the way since 1973. You can see we've fallen to the lowest level since 1988, which is basically showing you that that the companies aren't really leveraging up. Now, what's really interesting about this is that if companies aren't leveraging, then typically you have lower returns on equity, and there's companies that don't bet the farm, obviously using a little bit of leverage, tend to be the laggards in the market. So I think that this is actually, in my mind, it's if you do have a big pullback, obviously the companies will be able to handle it in terms of their debt load and that sort of thing. But one problem is that that's going to put a real cap on growth for a lot of these companies going forward until you start to see them putting some leverage into the market, and so that could be a bit of a concern. Could be a bit of a cap on the upside on the S&P in the near term. All right, we'll look at corporate action earnings out this morning. We had Life Healthcare, definitely looks light on consensus. Headline earnings per share, revenue and DB per share, all lower. DataTech out this morning. They had a trading statement a couple of weeks ago, or a week ago, looking dead in line with guidance on headline earnings per share. The revenue is a beat, and the DB per share is a nice beat. SAB Miller also looking a little bit better this morning. DB per share, I think, came in at $1 and change. Expectation for at 82. The consensus earnings per share, obviously kind of in line here. So I think it's also a solid number out of SAB Miller this morning. All right, if we get into the market data for today, we've got the current account balance, or had the current account balance out of Japan slightly higher. We have the German GDP numbers, or had the German GDP numbers. The numbers came out at 0.3 versus expectations at 0.5, so it's a little bit of a miss. We had CPI as well. I did not see the CPI numbers. Just have a look here. No, I'm not sure what the CPI numbers are. Then we've got jobless claims out of the UK at 10:30. We've got GDP out of the Eurozone at 11, and then we've got some data out of the States today, mortgage apps, retail sales, and crude oil inventories. All right, let's get into the maps. First thing I want to do here is look at the U.S. bond market. So this is what we're talking about as being the most important thing in the world at the moment. We're looking at the 225 level here, and we're shade below that at the moment. We're trading at 224, but still more or less right at this level. Maybe we're breaking out on yields, and we're just putting in a little bit of consolidation. Yesterday, we were traded to 236. It looked like we were just about to just completely explode. The bottom line is we've got nicely above the 200-day moving average. However you look at it, we're definitely putting some consolidation. It seems like there's been a shift in terms of rate expectations. And, from there, you've got to think at some point the market's going to have to, to pull that into, forward expectations. All right. Let's look at Sunlum. So Sunlum yesterday closed right at 73, basically 72.95. You can see here that is the main level we're looking at, is right around there at 73. Let's zoom in a little bit further and just see exactly what we're talking about. So we're looking at, the real level, I would go out and say that the main level here is somewhere between 73 and 73.30. So I don't think that you can say that that's a drop. We've dropped it by 5 cents. I don't think that you can throw out a drop just because you've gotten 5 cents below what you consider a level is. To me, it's closing right at the level, but you can see how big this level is. If we drop that, I think we got a long way to fall. We'll obviously come down to test the 200 probably, but we could easily trade all the way down here closer to maybe some sort of level around 64 and change. So potentially could be a long way to fall in Sunlum if we were to convincingly drop the 73 level. Next one we'll look at is Standard Bank, which is also dropping a little bit of support. So here at 170, there's obviously, we talked about this for a couple days now. You can see over the last 4 days, we've gone below 170 every day. Yesterday was the first day that we actually closed below it. We were lower than this on the day again yesterday. If we do stay below 170, I think we can correct maybe down to where we broke out, which is about 161, 162. And, I don't know that we should be looking for any more than that. But, in the near term, maybe that's what we've got if we can stay below 170. Billotins, we talked about this one again yesterday. So Billy's definitely looking a bit cup and handle-ish here. No matter how you look at it, this chart is definitely starting to look bullish. We closed above the 295 level yesterday, which is where resistance is. We were trading way above that yesterday at one point. The same sort of thing here. We're consolidating around the 200-day. Now we're starting to push higher. This chart's definitely looking bullish. The target on here is really, really high above this level. So, it's something to keep in mind. The next and the last one that we'll look at is Kumba. So we'll look at this on the 30-minute chart. So we're definitely looking a little bit head and shoulder-ish here on Kumba. Managed to kind of close up toward the higher end of the levels yesterday, but it's quite obvious here. You can see the setup looking a little bit head and shoulder-ish here. I can draw this other line at the neckline around 155, 157, somewhere in there. So if we drop that level, I could really see us coming back and retesting the lows in Kumba. So just keep that in mind. This isn't broken down yet. We need to see this thing drop the neckline for us to get confirmation. And that's it for today, guys. Good luck out there.